Apple, a company that needs no introduction, holds the distinction of being the world's first company to reach $1 trillion and $2 trillion. And for a brief time earlier this year, during intraday trading in January, Apple became the world's first $3 trillion company. However, the stock fell by 30% in the first half of 2022, despite these impressive numbers. In this recording, we're going to deep dive into Apple stock, look at its history and past performance, when the declines of 2022 could potentially come to an end, and what the future holds for us as investors. We need an answer to if Apple stock is a good investment, and the best way for us to do that as busy everyday people is to switch over to the charts. So if this recording helps to up your investor game, don't forget to like, subscribe and hit the bell notification. My name is Sahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 plus years profit from trends in the markets through our simple to learn methodology. I also write for a number of publications, including benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stock's performance, focusing on the next 3 to 5 years. Okay, so before we switch over to the charts, a brief history of Apple. Apple was founded in California in 1976 by Steve Jobs, Steve Wozniak and Ronald Wayne. The company went public in 1980 to instant financial success. However, following this initial boom, Apple started to hit hard times. Wozniak left on good terms to pursue other ventures. However, Steve Jobs was ousted and started another company called Next. In 1997, however, Apple, close to bankruptcy, acquired Next. The rest is history, as they say. Apple's mission statement is to bring the best user experience to its customers through its innovative hardware, software, and services. Apple now employs over 150,000 people. It is the largest technology company by revenue, totaling around $366 billion in 2021. And as of May 2022, it is the world's second biggest company by market capitalization, the fourth largest personal computer vendor by unit sales, and second largest mobile phone manufacturer. It is one of the big 5 American information technology companies, alongside Alphabet, also known as Google, Amazon, Meta, and Microsoft. They also purchased Beats for $3 billion, the largest purchase in Apple's history, and well ahead of the $429 million they spent purchasing Next in 1996. Persistence certainly pays off. You just have to have that belief. Now, does Apple have a stock performance that matches these impressive numbers? Let's switch over to the charts and find out. So this is a typical 3-screen setup of ours when conducting our analysis. It's the same setup that we use across the board, not just for stocks, but also commodities, currencies, and some cryptocurrencies as well. Let's break it down. In the top left, we have the monthly time frame. In the top right, we have the weekly time frame. And down here across the bottom, we have the daily time frame. Now, the reason why we look at the higher time frames is because it gives us a very clear picture of how the asset has performed in the past, what the asset is doing right now, and what the asset is likely to do going forward. It's also where we do less work to make a lot more profit, because it's more a case of holding our positions, as opposed to if you go down to a lower time frame, such as a 5-minute time frame or a 15-minute time frame, 1 hour time frame. You can imagine you're glued to your screen every 5 minutes, every 15 minutes, every hour. It just becomes a very difficult and time-consuming way of making money. By looking at these higher time frames, the monthly, weekly, and the daily, at the very minimum, you just look at what's happened at the end of the day. And this is, as already mentioned, is where you do less work for far more profit. It's a combination of using a trader approach and an investor approach. So we look at the charts like a trader, but we hold our positions like an investor. This is absolutely powerful for busy everyday people. So let's start with the monthly time frame. Now, as already mentioned, the reason why we look at the monthly time frame is because it gives us a very clear picture of how the asset has performed in the past. So if we just go back in time, that we can see that Apple does have a history of performance. It's steadily worked its way to the upside. So if you look at it from around this area here, 2005, you're looking at price around $2. So if you look to the right hand side, you can see that price is around $2. And if you look at the high of January of this year, it was just over $180. So it does have a steady history of performance. The downside to Apple is that it does have the potential to swing against you. The corrections in the market are quite deep. This was the correction in 2018 when price found support around $35. And since that point, price has been working its way to the upside. This is the decline in price around coronavirus in early 2020, and you can see how that was absorbed into the market as well. However, certainly since this point here, which is August 2020, price has been working its way to the upside, but it hasn't been a very smooth journey. It's been quite bumpy, quite jerky. It created its high of this year, which is January of this year, and since then the market has been in a decline. If you look at that decline, at its bottom it fell by around 30%. However, since that low of last month, price has recovered by around 12%. We can see that July so far is displaying bullishness. Now, if we look at this in further detail, what's also important, you will have heard me mention this in previous videos, is that current price action, this decline, is inside the annual levels of last year. So this green line is the highest point of 2021, and this is the lowest point of 2021. This decline in 2022 is within these levels, and so that is a good indicator that price is not in a full-on crash at the moment, and we should potentially be looking for opportunities to buy this stock. The most ideal time to buy a stock is when it's actually breaking out and creating new highs. Now, there's a lot of fear around stocks breaking out and creating new highs because people generally think that if a stock is creating new highs, it's going to crash at any moment. That's a very wrong opinion. When the whole market is bullish, stocks that are creating new highs are fantastic stocks to have in your portfolio. And the reason for that is that there's little work for price to do in terms of pushing higher and higher and higher. There are very little resistance levels that could force price back down again. So stocks that are printing new highs actually go on to perform very, very, very well. What we want to see for us here, particularly at Sublime Trading, is for price to start breaking out above the high of last year and potentially even above $200, and that would then make Apple a lot more interesting. If we move across to the weekly time frame, we can see that this decline of this year has taken price below the 50 simple moving average. Our trend filter is red to grey, telling us that we're more down to sideways. But crucially, we're still above this black line, which is the 200 simple moving average. Now, you will have heard me say this in previous recordings, that the 200 simple moving average is a proven indicator of the long-term trend. So if price is above the 200 moving average, as it is, we want to be looking to buy or look for long opportunities. If price now weakens further, breaks below the 200 moving average, then we could potentially start looking for shorting opportunities. So for now, the weekly is telling us that actually the overall stock is still bullish. We just need to time our entry if we want to buy into this. However, the daily time frame paints a slightly different picture. It's actually trading below the 200 simple moving average. The trend filter is red to grey with a little bit of green, confirming that we are in some kind of sideways market below the 200 simple moving average. So if we look across the board, we do not have that magic word alignment. Alignment is when all three time frames are painting a picture that is either bullish or bearish. So on the monthly time frame, if we just go through this on a quick summary, it's actually trading inside the annual levels of last year. So that's more of a neutral bias. It's neither bullish nor bearish. If it's above the high of last year, it's bullish. Below the low of last year, it's bearish. Inside these levels, it's a neutral market and where we stand aside. On the weekly, price is above the 200 moving average. Even though the trend is down because it's below the 50 simple moving average, the overall bias is bullish. And if we go down to the daily time frame, the overall bias is bearish because it's below the 200 simple moving average. So it's neutral on the monthly, bullish on the weekly, bearish on the daily. When you have a setup like this, this is an environment where you really want to be standing aside. If we go to a stock such as McKesson, which was our stock of the week earlier this week, look at how McKesson is performing in comparison to Apple. On the monthly, it's above the high of last year, so it has a bullish bias. On the weekly, it's above the 200 and the 50 simple moving averages, so it has a bullish bias. On the daily, price is above the 200 simple moving average, so it has a bullish bias. The downside is that price is just inside an area of consolidation. If it breaks out above this high point here, so let me just get the marker. And if I just mark the highest point on this stock, price is currently trading inside an area of consolidation. So if I just mark a couple of low points, you can see that price has a support and a resistance. So it's trading inside a consolidation area, and it's confirmed with our trend filter alternating between green, grey and red. When you have a period of green, grey, and red, grey and red looks a bit like the Italian flag. This tells us that we are in a sideways market and we want to stand aside. But the overall bias of the stock is bullish. And once price starts breaking out and printing new highs, this is a stock that you should consider for the portfolio. However, if we switch back to Apple, Apple paints a very, very different picture. It's inside the annual levels of last year on the monthly, above the 200 moving average on the weekly, below the 200 moving average on the daily. This is really quite an ugly looking stock. And it may be Apple, and you may love Apple products, you may love the iPhone, everything you own may be Apple. But that, again, as a consumer, you have to separate yourself from an investor. And as an investor, you would look at this stock and you would say, no, this stock is a low probability stock. This stock has more chance of making me losses than a profit. Now, you may get lucky. You may jump in and this could be a bottom, particularly if the S&P 500 is bottoming out and is recovering, and you could jump in at this point and the market could be moving in your favor. However, it's purely guesswork at this point. As investors, we don't make decisions on guesswork. We make decisions based on high probabilities. This is a low probability stock. So is Apple a good investment? Right now, it isn't. So I hope you guys found that useful, guys. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Go down into the description below. Click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard, guys, by clicking on this button. It will take you less than 2 minutes to complete. At the end of the scorecard, you'll get a report detailing your performance, and you will get 30 days free access to the Hot Stocks Vault, where we share with you the top 10 performing stocks every single week, saving you thousands of pounds in scanner subscription costs and hours daily and weekly having to find these stocks yourself. We do all of that work for you, share the top 10 stocks with you. All you need to do is then go about turning that into profit. I hope you enjoyed that, guys, and see you